Good afternoon, everyone. We'll just begin the session uh, in a minute's time. As a scheduled start of 14:45. Good afternoon, everyone. We'll just begin the session. I'm not sure if I'm only hearing my voice multiple times or everyone else is also hearing this.
We can hear you.
We can hear you. We can hear you.
No, I think I was getting replays of my voice again and again. I don't know why. Anyways,
there is some echoing.
yeah,
There's some echoing in your voice.
Hi, Ujjwala.
Thank you very much, everyone, for joining. My name is Deepak Mukhi, and I'm the director of FICCI Maharashtra and Goa State Council. A very warm welcome to everyone who has joined us here as panelists, and also on the FICCI Bike platform.
We can hear you. We can hear you.
No, I think I was getting replays of my voice again and again. I don't know why. Anyways,
There is some echoing. There's some echoing in your voice.
Okay, so I'm sorry, I just figured out why it was happening. My apologies. So thank you very much for joining for today's session, which is part of MSME Week, which we are organizing to celebrate International MSME Day, which takes place every year on June 27th. And we're very delighted to have a different kind of flavor to this kind of a program this year, because we have been doing the MSME Week or rather MSME Day program every year with very smaller focused subjects. But this year we have expanded it and trying to cover the key important areas which impact MSMEs, whether it is skill development, whether it is access to finance, whether it is the current ongoing digitalization exercise, and whether it is participation of women entrepreneurs in this journey. Today we are going to focus on our thematic subject, which is enhancing participation of MSMEs in global value chain. And this remains a core theme in how we can further enhance participation of MSMEs, especially in exports. That's going to be the focus throughout the week, and we would be doing 5 sessions, including today's session, every day till July 1st, and we've already shared the schedule with the delegates who have registered. We have around 500 delegates which registered for this particular program. So happy to welcome all of them. Before we move on to the experts who are going to talk about the various issues which can sort of help and guide MSMEs to participate more in the export, I would like to first invite Ms. Sucheta Shah, who's the past chair of our FICCI MSME committee, to give welcome address on behalf of FICCI.
Good afternoon. Mr. R. Narayan, President FICCI CMSME and founder and CEO of Power to SME, esteemed panelists and delegates. Good afternoon. A very warm welcome to all of you to the first day of the FICCI MSME Week 2022, which is being organized to celebrate International MSME Day 2022. The MSME Day is celebrated by the UN across the world to recognize the contribution of MSMEs to global economic growth and sustainable development. MSMEs in India are also the backbone of our economy and play a crucial role in employment generation. The theme of MSME Week is enhancing participation of MSMEs in the global value chain. FICCI has put together this series of sessions along with FICCI MSME and FICCI Flow, Mumbai, to capture views of experts from the industry and government on how MSMEs can enhance their competitiveness at the global level and be part of India's rapidly growing exports across the country. Earlier this year, India's exports for the first time crossed US dollar for 400 billion mark in a financial year due to healthy performance by sectors such as petroleum products, engineering, gems and jewelry, textiles and chemicals. To continue this momentum in the exports growth, enhanced competitiveness needs to be encouraged in both manufacturing as well as the services sectors, where MSMEs play an important role. Maharashtra is playing a crucial role in strengthening MSME ecosystem by providing various incentives for the domestic investment and exports to over 10.5 lakh registered MSMEs, employing over 62 lakh people in the state. One district, one product scheme is one such initiative which aims to identify products with export potential from each district as well as exports from the state. So far, 113 exportable products have been identified in the state. While the government and the institutions are playing their role to support the growth of MSMEs, much more can be done to realize the greater potential of the Indian MSMEs. Earlier this year, the draft policy on MSME by Ministry of MSME proposes multiple policy changes with an aim to promote MSMEs. Competitiveness to build a vibrant ecosystem for the rapid growth of MSME sector. However, effective and efficient execution and implementation of these policy measures will be the key to empower the MSMEs to its future growth. With this premise, the sessions during the FICCI MSME Week 2022 have been divided in the key areas of importance, including technology and digital transformation, access to finance, skilling and role of women, entrepreneurship, and employment starting today. These sessions will take place for next 5 days and share initiatives taken by not just the government, but also private sector, including the startups. In today's session, we are joined by Head of Export Promotion Council for sharing their views on export competitiveness. FICCI has been and will continue to play a role of facilitator and help MSMEs build their capacity and handhold them to be globally competitive through its various initiatives. With these remarks, I once again welcome and thank all our speakers, delegates, and sponsors for being part of the MSME Week and hope that deliberations and feedback from the sessions will be productive. Wishing you all a very stimulating International MSME Day and a week ahead. Thank you.
Thank you very much, Suchita ji, for setting the tone and sharing with us that why we are doing this program and on what premise we are doing this program. Moving on, I would like to invite Mr. R. Narayan, who's the president of FICCI MSME, another sister concern of FICCI, which focusedly working towards empowerment of MSMEs, and also doing a lot of capacity building initiative. So I would like to invite Mr. R. Narayan for his keynote address.
Thank you so much for that. Am I audible?
Yes, sir, you're audible.
Yeah. Mrs. Sujeta Shah, past chair FICCI MSME Committee, Maharashtra. Ms. Ujjwala Singhania, co-chair FICCI Maharashtra State Council. All the other distinguished speakers who are part of this entire MSME week. FICCI and FICCI CMSME members, friends from the industry, ladies and gentlemen. A lovely good afternoon to all of you for joining us today on this special occasion of International MSME Day. On behalf of FICCI CMSME and FICCI, I wish you a very happy International MSME Day, and I hope this year will bring further success to your business endeavors. For those who may not be aware, FICCI CMSME was established in the year 2013 by FICCI, the leading industry chamber of the country, to serve MSME sector that acts as the MSME arm of FICCI. With the vision of empowering MSMEs, FICCI CMSME has always been proactive for the promotion and sustainable development of the MSME sector. FICCI MSME keeps organizing various capacity building programs. We reach out to the MSMEs spread across the nation due to the tremendous support we receive from FICCI state councils. I'm glad that under the banner of FICCI Maharashtra State Council and FICCI MSME, we are celebrating the MSME International Day today, which is going to continue for the entire week, packed with stalwarts from different domains who will enlighten us with their views, experiences of the MSME sector. As per the annual report of the Ministry of MSME, the country currently has approximately 633 lakh MSMEs, employing over 1,109 lakh people. The sector's contribution to the GDP and exports is 29% and 49.66% respectively, which has grown from the past years. Besides, under the Udyam registration, more than 92 lakh MSMEs have already registered in the country in this scheme. The Government of India aims to increase the GDP contribution of MSMEs to at least 50% from the current 29.7% and have taken measures to encourage the sector. There is no need to further elaborate on how important the MSME sector is for the inclusive growth and development of the country. And we all know that MSME is driving the country's economy in many of the world's economies. Ms. Sujeta already spoke about this. The bigger aspect to consider is how growth would become greener and sustainable. The world is changing at a rapid pace, and things that were relevant till last year has become irrelevant today due to factors like COVID pandemic, and these factors will keep interfering and intervening in different forms to create challenges for small businesses. Going forward, it is innovation and R&D which will yield results for MSMEs. It is a fact that the major of the country's innovations come from the MSME sector. It's a matter of consideration that we maintain sustainability in this regard, which is possible through extensive R&D. However, I also understand that it's not easy for MSMEs to keep on investing in R&D, but it is one imperative for growth today. While investing in R&D, it's crucial for MSMEs that there are other factors which also affect the growth and development of the MSME sector. And I'll like to mention a couple of them here. One is, the financing opportunities. Financing for both their capex needs as well as working capital requirement continues to be a significant aspect that decides the progress, quantity and growth patterns of an MSME. Consumer demand is another key challenge. Consumer demand remains a key aspect of any enterprise's growth trajectory. It's necessary to adopt the latest trends emerging from consumer demand. Marketing. The fast-changing global economic scenario has thrown up various opportunities and challenges, therefore, to the MSMEs in India. While on one hand, many opportunities are opened up in the sector to enhance productivity and look for new markets in the national and international level, it is also, on the other hand, put an obligation to upgrade their competencies to meet the competition as new products are launched at an astonishing pace and are available worldwide within a few weeks. Marketing, a strategic tool for business development, is critical for the growth and survival of MSMEs. Marketing is the most important factor which the MSME needs to consider for its success of its enterprise. Skilled, competent workforce, technology upgradation, all these are all important factors that the MSME will need to focus on. I'm not focusing on these because there are stalwarts who will come and focus on each part of this, each of these aspects that I'm talking about. Besides the above factor, there's one more factor that has played an important role in the development of MSMEs, especially during pandemic. As we know, MSMEs run their business with minimal resources, and somehow they also lack the knowledge and information which is required. While COVID restricted people's physical movements, online commerce grew significantly, and so did the online solutions for connecting with customers and digital seamless transactions. In the current scenario, it is important that every business should have an online presence and should also have the expertise to use this tool to maximize business opportunities. Though MSMEs have shown interest to join the online bandwagon, there are still many MSMEs who are relying on the old method of business. They are not aware of the social media marketing, which is a powerful tool for business development in the current time. It is critical to build upon the digital literacy in the MSMEs to ensure that they make optimal use of the technology-enabled platforms. With their inherent capabilities to grow, digital transformation could be a suitable solution to truly help realize the potential of this sector. For Indian manufacturers, the events of 2020 have been a wake-up call to develop better digital systems for navigating disruptions like the one we are currently experiencing, and value chain visibility has become the most crucial capability for manufacturers to develop. For example, manufacturers experiencing a surge in demand from alternate channels need to ensure visibility of their supply network as they ramp up production and adopt Industry 4.0 that enables end-to-end visibility for them, which means having data available across the supply chain in real time to enable better decisions of risk management and performance improvement. Reducing waste, adopting lean, lightweighting, reducing energy consumption, reducing rejections. In a nutshell, doing more with less is what is key to the sustainability initiative. The digitalization empowers manufacturers to embark upon initiatives that make these things possible. Reducing weight demands value engineering, sometimes accompanied by material substitution, which would need revalidation of intended performance improvement, and this can be achieved with the digital design and engineering simulation. With the right and favorable ecosystem covering the above factors, MSMEs of India will have the right impetus to make India a global manufacturing hub and contribute majorly towards achieving the government's vision and target of making India a $10 trillion economy by 2030. And I'm sure that this achievement through sustainable and this will be achievable through sustainable and collective efforts. With these words, I'd like to conclude, but before I do so, I'd like to wish all of you a happy MSME day and a week once again. Thank you very much. Over to you, Deepak.
Thank you, Mr. Narayan, for that very vibrant, talked about how MSMEs on multiple areas can, improve and how they can contribute towards the goal of our $5 trillion economy. And I'm sure the way exports have performed in, last year, there's a hope that it can really go beyond that level if a right impetus on the enhancing the productivity of MSMEs and competitiveness is given in a mission mode. So I think that will really make a big difference. So thank you very much for both Suchita ji and Mr. Narayan for being here and sharing your views and sharing FICCI's initiatives in this sector. Unfortunately, what's going on in Maharashtra, I had confirmation from both minister and secretary, but they are unable to join, today, probably during the week sometime, at least secretary will join. So my apologies to the, audience for that. I mean, it's beyond my control actually. So my apologies for that still. Now, so what we will do is that we'll move on to our, session, which focuses more on the export side. And as you all would be aware that India has recently signed or at least finalized or taken to some level major agreements, which includes UAE, the UK and the Australia, and it's still in discussion in EU. So these are some of the areas where even Honorable Minister have kept telling that, while government can play its role in finalizing and doing these trade agreements, however, it's the industry which needs to show right kind of sort of attitude and agility to take basic benefit of these trade, because the idea is to enhance the bilateral trade between these countries. But this session is just not limited to these three trade agreements, but in general that with India's Atmanirbhar Bharat, and the ability to scale and then go to exports market is something which many of the sectors have demonstrated during COVID times, and we hope that this can be replicated in other sectors as well. That's why we are joined with heads of three major export promotion councils are with us. Mr. Manoj Patodia, who's the chairman of Texprocil, which has a large sort of part to play in export promotion, and they're one of the largest stakeholders apart from gems and jewelry and petroleum products. And then we have Dr. Abhay Sinha from SEPC, Services Export Promotion Council. He's the Director General, and Mr. KL Dhingra from the EEPC. I mean, again, engineering goods are one of the big area where exports can take place, and especially MSMEs can benefit it. So Mr. KL Dhingra, who's the chairman of the Western region of EEPC India, he's also with us. And we'll also be joined by PCGC representative who can talk about the insurance related issue in this session. So this session will be moderated by Mr. Kishore Pradhan. He's a seasoned professional and expert in international trade and finance area. He's also a member of ICC, actively works with FICCI. So he's going to moderate this particular session, and I hand over this session to Kishore for further deliberation. Kishore, over to you.
Thanks, Deepak. Really appreciate this opportunity to share our thoughts with our, fabulous panelists on the discussion. First of all, I wish everybody happy International MSME Day. I mean, this is the area which has been neglected in the past, but we have certainly given a due respect and due due attention to the MSME, which is the pillar of the Indian economy. If you really see all the figures which has been shared by Mr. Narayan and Mrs. Sucheta Madam, it accounts for the almost 30% of the total GDP as far as the India is concerned. I mean, almost 35-40% of the exports are through MSME industry, and due respect need to be given to the MSME companies. And let me share that even my company, when I am in the advisory firm, my company is also registered with Udyam as an MSME company. So it is certainly an honor to be here and moderate a panel discussion on MSME Day. Let me welcome Mr. Manoj Patadia, who is the chairman of the Cotton Textile Export Promotion Council. Mr. Dhingra, who is the regional chairman for the Engineering Export Promotion Council. Dr. Abhay Sinha, who is the director general Service Export Promotion Council, and Mr. Mahalingam from ACGC. See, as we actually say, Mr. Narayan has, in an excellent fashion, highlighted the challenges of the MSME. If you really look at, the major thrust on the R&D, which is actually a challenge for MSME guys. If you look at arranging the finance, raising the finance from the bank, we are still in the industry. I myself is a banker. I have worked almost more than 25 years in banking industry, but then this is certainly a challenge for MSME to raise the finance. Getting the financing without any collateral security for the MSME is a big challenge. Fortunately, there are some new ideas are coming up. There are trades platform which has been launched by the Central Bank of India, Reserve Bank of India. There are 3 platforms which are offering this kind of services. Then there are some factoring companies which are offering this. So there are, but however, on all this put together, there are still challenges for many MSMEs to raise the finance. It need to be percolated down the level for the MSMEs, which will actually help them to manage their working capital, consumer demand, skills, technology. It's certainly a issue even today. I mean, what is important, I mean, few years back, I was actually in Indonesia. We had a seminar on from the ICC perspective, and how do we actually, promote MSMEs for the international trade. And one of the key areas which was discussed is the percolation of the knowledge. Now, it is not only knowledge of the industry, it is the knowledge of the trade guidelines also. So many times, many MSMEs, being a banker, I can share that the knowledge of the trade guidelines, the international trade, is very limited, and that is where bank need to act as an advisor to all these MSMEs. Fortunately, we have a lot of export promotion councils, a lot of people who are helping assisting the MSME guys. However, another step forward need to be taken by the bankers, which will actually help MSMEs to understand the criticalities, nuances of the trade guidelines in the international trade. Now you talk about any kind of an UCP guidelines or URDG guideline, nobody will be much aware of it, and that is where bank need to actually step up and actually extend their support to the MSMEs. India is actually changing. There is certainly a Bharat badal raha hai, desh badal raha hai. Everything, world is coming closer. We are at the stage, what we call it is a Vasudhaiva Kutumbakam. The entire global industry is becoming as a one family, and that is where India is actually pushing heavily in the industry, and especially that is where MSME should take some kind of an support from the industry experts and push their sales and push their industries in that. India is actually focusing on the Make in India concept. There is a major thrust, and that is going to be a fabulous opportunity for all MSMEs to contribute from the Indian economy perspective. There is a good increase in the infrastructure. There is a good support of the technology. There is a availability of information, availability of the data, which actually help you to take a lot of decision, try to get into R&D mode and understand the business practices, products, and the technicalities of the trade. In short, if I have to actually explain it in a very simple fashion, it is a ease of trade. And believe me, I'm dealing with a lot of banks and a lot of MSMEs, and it's certainly helping us from the infrastructure what has been developed, especially from the IT perspective. There is a transparency, there is a security, and earlier, you need to go to so many offices to get all the licenses and get it registered. But for today, you can actually do the online Udyam registration completely online without actually visiting the office, and that's the key area. So if you really look at it from the export, today we are actually going to concentrate on the export. I was actually going through one of the report of a Standard Chartered Bank and PwC, and they had actually projected the growth rate of 7.6%, which would reach India to the extent of $564 billion trade in 2030. And that's a big thing. That's really big thing. But the question is, how do we achieve that? Question is, what are the factors which will be required for all MSMEs to manage such a high growth? Whether MSME will be there, certainly. Without MSME, such kind of a growth is completely impossible. And this is where actually I will stop here. I will request Mr. Manoj Patodia to share his thoughts. I will request all panelists to introduce themselves and share their thoughts. And if time allows, we can certainly go for question and answers. So I will request Mr. Manoj to share his thoughts. So
thank you very much, Mr. Pradhan. It's a pleasure to be here today and speaking to such an august gathering. And I also like to thank my fellow panelists, Dhingra ji and the other gentlemen who are here today. Thank you very much, FICCI, for giving me this opportunity. So you'll be glad to know that, this year we have achieved a record export in textiles of $44 billion US. And this has been only possible because of our MSME sector, because textiles, most of the companies are all MSMEs. And the government has set a target of $100 billion to be achieved by 2030. As you said, the overall export, which the PwCs and others are projecting about 560 billion for textiles, 100 billion has been set. And it is possible to achieve this 100 billion, especially with the growth in the MSME sector. And the government is doing a lot of things to see that this growth takes place in the export. And one of the major part which is going to be is the free trade agreements. We have already signed a record free trade agreement by our with the guidance of our Honorable Prime Minister and our Minister for Textiles, Piyush ji. We have been able to record 88 days. The UAE FTA was signed, and then followed Australia. And in the pipeline are UK, which is a very important market for India for the textiles. I think it will be done by Diwali, hopefully. And next in the line is EU, Canada, and Israel, and many more to come. So with all these things which is happening, we will be at par with the other countries in the world, and therefore our growth in this sector in textiles, especially in the exports, can pick up in a big way. And another advantage India is having now is because of the issues with China in the Xinjiang area and the cotton, etc. India is also, because of the China One policy, India is going to be benefiting a lot. Coming to the next steps, the government is taking a lot of other steps for the MSME sector. We are putting up a PM Mitra scheme where 7 mega textile parks are coming up, where plug and play will also be one of the important things. This will help us to increase our production in the country. Then we have the PLI 1 scheme where 61 companies applied. Now we have the PLI 2 scheme, which is on the way hopefully for home textiles and garments. So this will help increase the investments. And so all this will increase employment and the investment, and especially for the MSME sector, which will also, it will help. The other thing the government has done is the ROSTCL scheme, which is for 3 years, and the ROTTEP scheme, which is been implemented, that is a refund of state levies and taxes. This is also helping a lot in this sector. And we understand that the new technological upgradation fund scheme is also underway. So this will automatically help the total sector. And as you also aware that under Suresh Bhai Kotak, a new committee has been formed for increasing the raw cotton production in the country, which is the lowest yield in the world. Even if we double it, India will have enough cotton to export to the world in any sector, whether it's cotton, cotton yarn, fabrics, home textiles, garments, or anything. So I think these things are going to help. The other thing which you were mentioning about MSME in the collateral, I would just like to mention one point. ECGC being a AAA company and a government of India, if the export limits which are being enjoyed by the MSME sector, since we are paying ECGC cover for the limits, for availing the limits from the bank, if they are also rated as AA or AAA, then automatically the requirement of collateral will come down. And with that collateral coming down, we can get higher limits, and that will solve a lot of problems of the MSMEs if this can be done. We have requested the government, we have taken it up with ECGC, and we are in discussion with them as to how this can be done. So we are already in discussion, but if this happens, a lot of problems of the collateral will also come down for the MSME. So with these few things, I think this will. I think these are the few things I thought I will mention and take it forward for the MSME sector. Thank you, Mr. Pradhan.
Thank you, sir. I mean, that was really crisp, and you updated us with the latest development. Can I now request Mr. Dhingra, to share his thoughts?
Yeah, good afternoon, everyone, and thanks you.
Sir, you are on mute.
Oh, is it okay?
Yes, we can hear you now, sir.
Thank you very much for inviting us for this program. And I represent EPC India. We got the target last year, 107 billion. And we have done about 112 billion. And this year target given is about 127 billion. And we hope that we shall be able to achieve this, because the way the total atmosphere and the encouraged by the government, I have listened to the speech of the Prime Minister on the inauguration of Vanijya Bhavan, and the plans, the support which the government is planning to do it. Of course, we are also part of that as far as facilitation of export is concerned. I'm very confident that with the help of our members, we shall be able to achieve the new target. Now, enhancing participation of MSME in global value chain, impact of recent trade agreements of today's subject. As you know, EPC is being a trade and investment promotion body for the engineering sector, have membership strength of 12,000, 60% of whom belong to MSME. Since our inception, 1955, we have been instrumental in taking a large number of our members, particularly in MSME sector, to different parts of the world to enable them to showcase their engineering capabilities and products. Trade engineering is largest industrial sector in India and accounts for 3% of the total GDP. For your information, we have been conducting IESS program, Engineering Sourcing Show in India, where we have been getting every year practically about 400 foreign delegates, and with the participation of about 500 of industries here, with footfall about 10,000. Again, we have planned such program in Coimbatore in the March. So the micro, small and MSME in India play an important role in India's economic and social arena, with significant contribution of output, employment, exports. Indian MSME to have share of about 48% of the India's overall exports. According to the World Bank, today over 50% global trade involves global value chain, which is again the subject matter of today. GWCs help MSME by integrating them into global network, of product conception, design, development, distribution, and support. Value-added trade contributes about 30% to the GDP of the developing countries. Driven by engineering technologies such as Industry 4.0, smart manufacturing, and ICT, India is likely to lead the world in almost every category. Overall population, number of college graduates, middle class population, cell phone, internet user, along with third largest military and third largest economy, along with the world's largest young population under 25 with 600 million. India is on course to witness 4x growth in consumer spend. $2 trillion will be spent in infrastructure in just next decade. By 2030, India imports that 40% of all purchases will be highly digitally influenced, up to 20 to 20% today. An effective way to MSME to internalize their activities is to participate in global value chain, which links firms across countries through international trade, enabling those limited resources and capabilities to take up specific tasks or processes within a GWC, rather than having to engage in the entire production system. Why are GVCs important for MSMEs? The advent of GVCs has also given opportunity to small firms to internationalize their product process. Studies have also identified the following opportunities for MSME in the global production network: increase in technology capabilities, greater utilization of production capacities, and improvement in the production efficiencies. Cooperation within enterprises, both upstream and downstream, provide MSME credibility and brand value, which help them to assess better finance, new contracts, and foreign investors. MSME, on their part, often provide better value for money and with their low cost of operations. Furthermore, MSME cluster can also provide economies of scale in particular production chain. Therefore, in a way, MSME form a cornerstone of a country participation in crucial GVCs. Studies conducted in East Asian economies have identified several factors that influence the participation of MSMEs in global production network. These are presence of skilled labor, labor productivity, financial stability, access to change credit, and ability to meet international standards. MSME that have been able to adopt information technology have been able to expedite their participation in GVC. Further, it is also important that any major policy in India used keeping in mind the future of MSME. India's trade policy has been undergoing significant changes, with India engaging in 30 bilateral trade and investment agreements covering various chapters other than exchange of goods. India-UAE trade agreement, which enable duty-free access to around 90% of the India's export to UAE, it will be extremely beneficial for micro, small, and medium traders, such startups. Incidentally, I was one of the members of the delegation who went to UAE at the time of signing of the Indo-UAE FTA. In terms of sectoral gain, labor-intensive industries such as textile, gem and jewelry, leather goods, footwear, and food processing industry would benefit the most of us. India's UAE comprehensive economic partnership agreements. I also would like to mention a few words on ECGC, because for your information, I worked with ECGC for 20 years, 66 to 86. And we have suggested to the government Nirvik scheme. I don't know how many of you are aware. So we have even suggested to cover the risk up to 95% as compared to 80%. Similarly, Mr. Patodia may be aware that as far as premium is concerned, only at the pre-shipment stage, it is being borne by the exporters, and at the post-shipment stage, it is borne by the bank or ECGC, whatever they want to do. So we have been trying that even for the pre-shipment stage also, it should be borne by the government, or there should be some special concession about this. Similarly, the percentage of cover and collateral, as Patodia ji have mentioned, we say that if they are getting a cover of 90%, they should take that as a collateral. Maximum, if they want, they can just fill up the gap of 10%, which our exporter friends will be happy to do it. So it should be taken as a real collateral, because 100% government, banks are also practically private, are government, but they are working under the RBI parlance. There should not be any problem. If we have to encourage, expand business, we at least give this. Rate of interest are also a question. But anyhow, interest equalization and other things are being taken care of. So ECGC also, we shall also take it up as you will be taking up, and we shall see that it is done. Thank you very much.
Thank you, Mr. Dhingra. It's really a good thought you have shared, and I will certainly agree with you as far as the ECC premium is concerned. In most of the cases nowadays, banks normally don't go for the ECC shipment. But in earlier, when I was actually in operations many years back, so we used to actually have the ECGC policy, and bank used to pay to ECGC directly on its overall the outstanding during the month. Unfortunately, that private sector banks and foreign banks are not still going for the ECGC policy for the pre-shipment, and they prefer to actually have a separate collateral rather than looking at ECGC policy as a collateral. Now, this is what we certainly need to push back and try to resolve this thing also along with IRD people. So thanks for your thoughts.
The atmosphere is very fertile. We shall be able to achieve all these things. We should go jointly, and government will also be there to help us.
No, absolutely. So before we actually go to the next panelist, one of my requests is this event is being streamed online on the FICCI Bike platform, and participants can actually ask the questions using their question and answer facility given in the website. So you can actually just click on question and answer, and you'll be able to ask the questions directly to any panelist, and we will share that with the panelists. So please feel free to ask any questions, and we'll try and see if we can actually answer those questions. So with that, I will go to our next panelist, Dr. Abhay Sinha. He is a Director General of the Services Export Promotion Council, and a very important promotion council, because this is where the lot of issues with the government bodies and on the bank side which are getting highlighted. So service export has always been looked at a very kind of an tough kind of an export promotion council. So we hope to listen to your thoughts and how we can actually make it very easy for the exporter, especially in the MSME sectors. Dr. Abhay Sinha, thank you.
Thank you, Mr. Pradhan and Mr. Deepak, for giving me this opportunity to address the services sector in this August panel. Thank you, Mr. Manoj Patodia-ji and Mr. Dhingra, to highlight certain points. And Mr. Pradhan, you actually started with the challenges. And I think when we talk about the challenges, I must begin on that note itself, because you see, this challenge we took in services sector, and the first point which I got to note is it's a completely data blind industry. Now, that is something like, you yourself mentioned about PwC report. You're talking about 2030, the target, $562 billion US. If you see the entire target given to the India's export is 1 trillion. Okay, now there also, that's the perception. There also, we don't find services being mentioned. That's something very important. I'll highlight a few more points. Now I must tell you, like this year also, like when we are talking about the targets in this financial year, I believe merchandise sector has done quite well, and so the services sector. But in most of the journals, most of the interactions where it happens, services sectors, the kind of growth it has shown despite the pandemic is often get unnoticed, and that's the perception we are trying to address. We achieved $254 billion US in this financial year, and we are expecting to reach $325 billion US in the coming financial, in this present financial year. Now, of course, that also we need to keep in mind that about 40 to 45% is from IT and ITS services. There we do have the data. Now, as everybody like Mr. Patodia and Mr. Digraji mentioned about the targets given, sector-specific target given to, say, textile, given to engineering exports. Likewise, every council got. We were actually struggling to fix up a target of the immense, the spectrum of the services what we cover. It's, say, for example, entertainment industry. It covers audiovisual, the entire is, AVCG component. Then we have travel and tourism, quite diverse. Then we have healthcare, education. Now, in what way we can fix targets for these sectors to reach through, keeping in view the constraint, the unique characteristic constraint of each one of them. That's proving to a very, very difficult task. And we are trying to highlight with the DGCIS, we don't have HS code like data. We follow CPC code, and that too we were constrained to follow that for SEIs. I'll address that part also. And pardon me if I take some long to address this, but this is very important. Why I'm trying to bring these points on the table is that, the sector itself is facing so much of challenges, and there within that sector, if you think about MSME, the challenges gets much, they are more step, those challenges. And of course, as I mentioned, there is a data constraint. We don't have the monthly reporting data. Hardly, like, only RBI is the agency which provides the service and export data. That too is done on the Forex, what is earned and what is being given out. And there is a code called purpose code. Now, there is a difficulty of mapping those purpose code with the sectors which I just mentioned. Just for understanding, we can think of 12 champion sectors. They are defined in a very different way. There's no such code. CPC version 2 is being adopted globally. There is another classification, BPM 6. Point is that, the services sector is facing these data challenge. There is a process of evolution in the understanding of, even in the aggregating the bilateral trade data. So all the more it makes very complex for the very complicated and complex scenario for the services sector. Now there, unlike merchandise export, there are 4 modes of exports. Our participants on YouTube or other medium may be noticed, should notice this. There are 4 modes. The first one is the digital mode. So anyone, whatever services we can offer across the border through digital medium comes under that. Second mode is very important, and that takes care of the healthcare sector, education, where the consumption happens in the country. So anything inbound, like inbound tourist, inbound, medical value tourists, all those education, they cover that. Of course, some part of the education can also be digitally transferred. And I believe new education policy is trying to address that. There is another dimension of legal services. That is also in the first mode, it gets covered. For mode 2, there is a bit of issue. Mode 3 is, where a permanent entity can be created with collaborations with the foreign partners. So it is delivered in the destination country using their resources, and of course, through collaboration or joint ventures. Mode 4 is temporary transfer of mainly say, for example, nurses going for a short duration, engineers providing the consultancy as a last mile part. So a lot of other challenges are there. Now, these 4 modes, we don't have the breakup of the data on these 4 modes, so it becomes very difficult. Now, they're also we are trying to address these 4 modes. This is one part. For SME, say, for example, when we talk about gaming, when we talk about animation, that can be done digitally in mode 1. Now, there, the issue of, financing comes up. A lot of softwares are required, which are very high end, and there is no provision. As we talked, and as my fellow panelists mentioned about various incentives being given to the different sectors, there was only one incentive provided to the services sector, was SEIS. Now that has also been taken away. And 2019-20, that notification came. For last 2 years, services sector is not getting any incentive. And even then, there are certain schemes in MAI. There also, unfortunately, the services sector was not exposed to exhibitions as in merchandise sector. I also come from pharma sector, Pharmexcel. So we used to serve a lot. There was something relating to the statutory compliances, like in product registration. I believe in textile or in engineering, there are certain provisions. Now, in services also, there are certain regulatory compliances, like, say, for example, telemedicine. There is no information on that. So we are trying to address, SCPC is now trying to address those areas also. And, I must mention it here again, that not even a single statutory compliance related reimbursement has taken place in case of services. So there is a lack of awareness also. And mainly MSMEs can benefit on these information, what we are trying to communicate. And that's why, like, I'm using all the forums of the KCII, even on our own, to address that. For the first time, Ministry of Commerce has given quite, a sizable component of MAI grant for us to take a certain export promotion activity. But on export development part, when we talk about training, interacting with the prospective members and trying to give them the value addition, what they can expect, there's a long way to go. And that's where, like, we are trying to get it funded. We don't have that support because industry is not aware that way. One important point I wanted to mention is that even the Ministry of MSME also came up with a draft policy for support. They're also, not even a single word of MS services sector was mentioned. And I highlighted this the very 1 week after the draft policy came. But, having traversed quite a distance, there is some positive development happening on 30th, I believe, when the ministry is going to sign MOUs with all the Export Promotion Council. And there, for the MSMEs, there will be a reimbursement of the membership fee. That is a very positive development, and that I think should be brought to the notice of everyone, like not only for the services sector, but for all the sectors where they do find that some membership of the councils are quite high. So these are the areas, and of course, like, the last point is FTA. Now, you see, when I joined this council, I noted that a lot of focus was and is being given on the product side, merchandise side, where, of course, you have the luxury of certain data information. Here, our embassies were also not aware about the local challenges. And that's how services sector never featured earlier in, large discourses. Of course, policymakers used to highlight this as part of the FTA agreement, but, it was never brought to the industry in the services space. Now, there we are, this FTA with Australia, with UAE, certain services sector like travel and tourism, education, and they all have been brought out. But still we feel that, say in case of Australia, there is very limited scope. Chefs and some other visa issues are there. But, the kind of market access which MSME or the entire services sector would like to have is yet a long way away. Now, with the new, in fact, there is like in the division also, like for export promotion of services, we have got one joint secretary, and very recently this division was made. We earlier used to be taken care by trade policy division in MOC. Now we have EP services. They are going to focus on these parts, and I feel that there will be like more positive news and the kind of contribution the sector is making. So there will be this perceptual change. And for MSME, I must assure that SCPC is definitely taking it forward with whatever we can do by coordinating with various line ministries also, because we need convergence of those line ministry as we cater to more than 14 sectors, on certain schemes, and not only depend on the Ministry of Commerce related scheme for the. So these are my limited points. I'm sorry I've taken quite a long time, but that's what like I thought to highlight. Thank you.
No, thanks, Dr. Abhay. I mean, it is not a question of time. The question is, how do we actually bring all the issues to the table? Now, unfortunately, service sector also need to be given a due importance. I mean, which was the issue in the past, and I really appreciate you bringing out all the issues on the forum. So at least there is some kind of an awareness, and of course, ultimately, we need to pick it up with the government agencies. We need to pick it up with the related parties and try to resolve these issues. And I will completely agree with you, because see, as a banker, we always have this problem on the service industry, and for us it is always a high risk. If somebody comes to me as an exporter, if it is a goods, then I am quite comfortable. There will be the ADPMS entry, there will be proof of dispatch, everything. For service, I need to depend on the only counterparties to say that yes, services has been completed, and there is nothing. If you really look at it, now we will have Mr. Mahalingam also. So there also, if you really look at it, from the credit insurance perspective, also service industry is not a very welcome industry for the insurance industry. They always think twice and do proper due diligence before they actually give any kind of credit protection in the global market. So these are very important issues, and I really appreciate you bringing it on the table. And of course, we will chat more on this. I certainly can share a lot of case studies on the service industries. But I'll stop here, and I will invite our next panelist, Mr. Mahalingam from ECGC, to share his thought. Mr. Mahalingam, I mean, you seem to be in demand from all the panelists. I mean, everybody is talking about the ECGC, and Mr. Dhingra was there he's also worked in ECGC. He has also shared his experience. So I think we really look forward to your session. I have personally dealt with ECGC for a few exporters, where we actually used to have that maturity factoring policy almost 20 years back. And my experience with ECGC has been really very, very good. Rather, I would say, people used to call me that I'm the person who has got 100% success ratio for the claim management. So whatever claims I have filed in ECGC, I have already got the payment for the claim. And of course, I have also helped ECGC recover its money after claim payment has been done. So we really, really look forward to your session, Mr. Mahalingam. Over to you, Mr. Mahalingam.
Thank you. And with great thank you, Mr. Sir and Mr. Patodia ji, and our good friend, Mr. Dhingra ji, always the brand ambassador for ECGC, I would like to say, because
thank you.
So, and every meeting also he advocates everybody to go with ECGC, and he never hesitate to tell to us, you have to change like this, you have to do like this. So such a wonderful session we had with Mr. Dhingra ji, all these things. And see, as you have rightly said, that it is a perception, people's perception, that ECGC are not paying a claim. That is still definitely there. When I get COVID, sometime before, during COVID, many people were not coming out and saying that I have tested positive. So like that, when people take a claim, they never come and tell outside that I have taken a claim, because they feel that how far the industry will think that I have taken, my buyer become bad. So I am not good in choosing the buyer. That is one of the main reasons. And of course, if the data if you see, every year we have been paying out as a insurance, any insurance industry, if they are going to pay anything around 70%. It's a very good solid industry. If they are going anywhere beyond 75, 65 to 30, 90%, then it is not working on a good note. So as far as he has said that MSME, as he has rightly said, our Dhingra ji, we have already been advocating government to go with a 90% cover, and to the banks, as Mr. Patodia ji has already said, it can be easy for them if they take this as a collateral. I will just tell us some point, because in many of the cases we find, even with the limit is huge given by the bank, if the collateral is only 10%, we do not question the bank why you have taken lesser collaterals, because we say that whatever bank is comfortable, even if they are comfortable, there are many cases bank has gone ahead without taking any collaterals also, because it's become basically a choosy one. And as Pradhan has rightly said, many of the private banks, they are averse to one thing is ECGC, second one is they wanted to get it secured. And that is the main issue going on here. Almost all the public sector banks, they go with lesser collaterals and they go with ECGC, cover everything. So I will make a small presentation, not a big one. Mr. Dingraji also knows about it, not much a big one. Small presentation only. I am making it. See, we are the, this is about 100% owned Government of India, like any other EPCs. We are under Ministry of Commerce and governed by Board of Directors, not only from ECGC, we have got from exporting communities, we have got from RBI, we have got from Finance Ministry, everywhere the directors, all the directors have been chosen. And IRDA is a regulatory authority. And we are the pioneer in the export credit insurance. And vision is to provide export credit insurance and trade related services. And we have to, mission is to support the export industry by providing cost effective insurance. Here we would like to say last 15 years, after 2007, 2 times we have reduced it. We have not increased the cost at all, unlike the other IRDA mandate to the other insurance companies.
Mr. Mahan, if you can please, do the full presentation.
Yeah, sure. I will take it in the full screen. I think we have branches all over the India, wherever the export focus centers are there. And I will talk about this. What is the type of risk we involved in an export transaction? Many of the exporters and the export promotion councils know it. And export credit risk is there, exchange risk is there, transfer risk is there, legal risk is there, and also political risk. See, exchange risk, most of us may not be now much of it because the rupee volatile is not too high nowadays. So people may not be going for a foreign cover unless otherwise we had a little bit of problem during Russia war. And a transfer risk, if of course it happens with now recently we have these type of issues with Sri Lanka and Nepal and Russia transferring, though Russia is having a good amount of money, but still they have, people are averse to it. And credit risk, buyer risk, which we are basically both political and credit buyer risk, we are covering it. And in a nutshell, if you see it, basically the first one, major one is a default, which is very much prevalent in the thing, inability of the buyer to pay on the due date due to maybe any other reason. And in insolvency, if you see, this is a very most of the companies. Recently, I have gone into an article where every day, minimum 5 to 6 company gets insolvent in Western and USA countries. And nowadays, earlier it was not there in India. Nowadays in India also a little bit of insolvency is invoking IBC is also now prevalent. And the contract repudiation, failure to take delivery of the goods, this is more prevalent in most of the product where the demand for the product goes down or the cost of the product in the international market comes down. And inability of the LC opening bank to honor the commitment also we are covering. We are covering the default of the LC opening bank, and we are the only credit insurance in the world to cover LC discrepancy also. And with regard to political risk, war, civil war, everything is covered. And nationalization, expatriation, sovereign acts, which in their effect equivalent to exportation are all covered. Import restriction, new import restriction done in that country. That one all is covered. Like recently it has happened, UAE has stopped our wheat imports in that country. So people who have already done, that has happened afterwards, after the shipment has gone. So these also are covered. And transfer delay, payment embargo restrictions also is covered, like Argentina, Venezuela, all these places. And we have got a basic basket of various policies. As Mr. Patodia has said, we are under the small exporter for MSME, we are providing 95% cover for a buyer failure and 100% cover on account of a political risk failure. So that is we are going and giving the cover up to 100% of the value in certain cases. So various type of, it can go for a single transaction cover or a single buyer cover or for a basket of all your covers. So it depends how much you are wanted to cover, you can choose it. And we have, good thing is that we have around 4 lakh buyers on record, and every buyer is being assessed with a business ability, what is his financial trust, and what is his transaction behavior and industry. And apart from this, above all, we are taking it, what is the relationship between India and that particular country, and how the exporter have got a relations. See here, what I told, the relation between India and that country, because all these FTA agreements goes into account while underwriting a buyer. Because we are very liberal in underwriting many of these African countries, and even now, as you say, UAE earlier itself we were doing it. Now we will be liberalizing in UAEs, and I heard that they are going to have a FTA agreement with Canada already. Australia is over, UAE is over. So all these FTA agreements are going to have a very good impact on the underwriting of this particular buyer. Because if the buyer is worth of 10 crores, ECC will go ahead and go with another 5 crores or 10 crores, whatever their requirement. Unless otherwise the buyer is very bad, we will say no. Otherwise, even a small amount of it, if you see compared to the other analysis, our analysis is a detailed analysis, and we help the exporters. And country rate testing, we do it based on the economic risk evaluation, political risk evaluation, and we are categorized into 7-fold category. And a good thing is that no country is off cover. Unlike any other country credit insurance, India's export, we are not off cover to any country. Even Sudan, we are covering. So that is a good part of it. And somebody will ask why ECGC? We are from 1957 onwards, we are there. All the 239 countries are covered, out of which open cover countries are 211. Restricted cover category is only 28. And these 28 countries are not off cover. We are providing cover either for 1 year basis or for case-to-case basis. And higher cover with liberal underwriting, as he said. And as I earlier said, we have got around 4 lakh records on record. Every buyer track record is being updated on a regular interval. And a certain caution list on buyers are also available in our website. That is available only for the exporters who are already taken it, so that when they negotiate with a new buyer, they will come to know whether this particular buyer has already defaulted, how far is track record, all these things. And we also help in collecting the bad debts from the overseas. This is available for almost all the exporters. And during pandemic COVID, we have enhanced, given liberal time period, renewals and shipment declaration claims, everything. And we have given extra discretion to extend the due date or sell it to somebody else or re-import, all these things. Last year alone, we have paid around 735 claims amounting to 1,000 crores. And major claims paid, if you see Pier 1 import, JCPenney, Lucky Brand, Dungrades, so many other things. I have pointed out only some few others. And performance highlights, if you see it, every year, 1,062 crores, 1,046 crore claim paid, except in the year 2020, 2019-20. This is because due to that year pandemic, people were not able to submit the claims where the offices were not working. Every year we have been paying around 75%. In some years, we have paid more than what we have received. So with a few things, now I might have already told all these things. And as everybody has asked it, MSME also, we are also here trying to help the MSMEs. We have been talking to the exporters, we have been talking to the clients, but still the people's awareness towards credit insurance is still not there. Penetration into the credit insurance market is still there, not there. And now only people are now started thinking about, because even for health insurance, we have not been so aware. We have not been penetrating. Now, after this COVID and other pandemic, everybody started taking health insurance people. Similarly, exporter community also, if they come out in large, we can also talk to government. See, every exporter, huge amount of exporters are coming. Why not you relax many of the things? As Mr. Dingraji has already told, we have already taken up with the government. And I need to say that last 1 year, we have been talking about NIRVIC scheme, but still it is in the government only, not approval has not come. So unless otherwise some push is being done from the councils to the ministries, everything, then only they will be able to go forward. And we are here to support any MSMEs and all the exporters from our side. Thank you very much, sir. Anything is there, we can have a discussion.
Thanks, sir. That was really a nice session. I think you covered almost all the points, and I'm sure the participants who are actually hearing to this particular conversation will certainly like to look at ECEC as an another option. See, I mean, I can actually highlight few portions like political risk coverage, which is 100%. Believe me, not many people are aware of this. For factoring, you are covering 95%. For other things, you are covering 80%. We never looked at, when ECC was covering the bank risk, especially when the LC are issued, and for LC issuing bank.
मैं अभी वेबिनार में हूं, मैं बाद में बात कर लेता हूं.
For LC issuing bank, people normally go for the confirmation cover, but then we turn to ECGC only for the difficult countries. Now that's a challenging situation. I mean, from the ECGC perspective also, when ECGC is covering the risk, they are also need to do their own due diligence, which takes time, and which I think the applicant, who are the people who are actually applying for the credit insurance, need to understand. Fortunately, I have worked on the both sides as a banker and more as a consultant to the insurance companies in the factoring industries. I'm on the board of the two factoring companies, so I'm aware of the back end work with insurance company need to do, the kind of a due diligence it need to do. And I really appreciate Mr. Mahalangam coming on the board and actually highlighting the positive things about the ECGC. I'm sure people will start looking at ECGC's pre-shipment policies and post-shipment policy. It works absolutely on the turnover basis. It works on a portfolio basis. The cost is negligible. Its cost is not very high for the pre-shipment and all those things, but it covers the entire portfolio of a bank, and you can actually avoid giving any kind of an collateral security, which is a key pain point for the MSME. For financing, if you really look at it, there are people on the trades, like for local MSE companies. RBI has initiated trades. There are 3 trades platforms where you can actually sell your receivables, and this is restricted only for the MSME sellers. Now, in a similar fashion, RBI has actually allowed the GIFT City, IFFC, International Financial Service Center. So they have also given a license for the sandbox testing to 4 companies to set up a ITFS platform, that is International Trade Finance Services Platform. Now that it will work similar to like trades for the domestic. So ITFS platform will help Indian exporters to sell their receivables online on this e-marketplace. Now this is again an international platform being set up in the GIFT City. So it is not restricted only to MSME, but to all exporters, all the importers, where there will be exporters, importers, bankers, insurance companies, factoring companies will be there participating on this platform, and you can actually purchase sales receivables. You can actually go for the pre-shipment finance, post-shipment finance on this platform. So this is going to be a fabulous and very aggressive step taken by the government, and I'm sure this is actually under the sandbox testing. Fortunately, I'm also part of it, one of the participants who are doing the sandbox testing, and it will come to commercialization very soon by the end of 2022. So we can see another boost for the MSME suppliers from India, especially for their export receivables, maybe for their import payables also, if they can take the advantage of this platform. So
we are already there in IFSC. And we have some 1 or 2 clients have already approached it, and we are also financing it. We have been telling also, as you have rightly said, we have been doing now full-fledged factoring also. They can also, people wanted there, both in foreign currency and in INRs, we are doing it. Foreign currency only from GIFT City, and we have not only from GIFT City. Any SE is unique, they can come and take it in IFSC. That we have relaxed it.
Absolutely. See, one of the questions, for one of the panelists is how the export is actually looking at it, especially the project exports, post-COVID area. We understand from the global market that there has been some kind of an pressures, especially for the project export. And Mr. Patodia, you can also talk about issues on the textile industry post-COVID area. I was speaking to a few guys in the textile industry in US, and they said this is the industry which is facing real challenge post-COVID area. So I'll request Mr. Dhingra to talk about issues in the project export post-COVID area, and then I will request you to Mr. Patodia to talk about post-COVID issues. Mr. Dhingra, can you share some thought, especially for the project export in post-COVID area? Sir, you are on mute. Sir, you are on mute.
Yeah.
Thank you, sir.
So before I respond to this, I like to share another thing. You see, when I used to work with ECGC, I was on the committee of the Exim Bank, where Exim Bank, RBI, bankers, because you are also conversant with that, and the exporters used to be there. So that used to be a projects exports only. Now the basic question today is, for short-term exports, retail export, things are taken care of in a different way. In the project exports, because I happened to visit 2-3 countries, the cement plant and the sugar plant, which our exporters were putting, and then we used to go for inspection and all that. So I can visualize the situation that during the COVID situation, what could have happened. Different areas had different problems. Now, if our people were not in a position to come to the offices, though we are in a position to do on the laptop and mobile and all that, but project exports things cannot be done. You see, documentation can be done, everything is done. But when production has to be done, when clinker has to be put in there and the furnace has to do the plant and the sugar has to.
Agree.
So there is a must. And another problem is, once the dislocation happens, and then we have to restart it, the real cost goes up. The people are not available. Trained people do not come back. So the cost also goes up, and the contractor faced a lot of problems. Now, in this case, the exporters, because there is a separate export merchant council for project exports. So if they collate all those things which are going through this, then we can do our brainstorming and see that what best could be done to cover such things even in future. You see what has happened, things have taken care of, people have lost, people have not gone all that. But as a proactive organization, proactive country, we should try to find out answers to all this, so that even if it happens again, for one reason or the other, that could be COVID, it could be another thing, it could be civil war, it could be other thing, what sort of a precaution should be taken so that minimum loss is there and the maximum product is given. This is what is my personal experience in this.
I would completely agree to it, sir. I mean, you have put it in the right words. I mean, I can actually share with you, just few months back, I completed, PAIM audit. So basically for project export, there are separate guidelines by RBI, PAIM guidelines, project and export management. So, for one of the large corporate, my assignment was to do the PAIM audit, whether all the export guidelines have been followed and all those things. And we come out with some interesting thought process. So maybe some other time we can actually discuss about this. But this is really interesting. And that's the reason I actually came out with the project export query, because this is the area, again, the knowledge levels and the understanding of the, overall projects and the guidelines, international guidelines are the key issues. And this is where we actually, from the India perspective of being a developing country, we always face a lot of challenges, especially in the Middle East and all that. So that's a challenge. I mean, I also faced when I was doing the audit, but then fortunately, because of information technology, we had a lot of information on how it actually happens. But then, yes, I completely agree. This needs to be discussed in detail, and we need to come out with some kind of a thought process. So I'll go to Patodia, sir. And sir, how do you look at overall textile industry post-COVID area?
Okay, so very interesting question. And to reply to your question is to just to understand, you see what happened during the COVID time, everybody was working from home. When people were working from home, there was a huge pent-up demand, and there was quite a big demand in the home textiles and also in the knitted garments, etc., because of the people working from home, so it was more casual. Also, the governments all over the world gave a lot of stimulus package, and the interest rates were brought down to zero, practically everywhere. Now, what happened is that there was a huge demand, there was a stimulus package, etc., that created a lot of pent-up demand. That pent-up demand went up a lot, and at the same time, there was labor shortage. There was a huge problem of logistics. The logistics prices from, if it was say $2,000, it went up to $10,000, etc., etc. When the logistics went up, especially the shipping, and it was reaching, which was reaching in 1 month, or reaching in 4 months or 3 months because of the delay in shipment, and the ships were standing in various ports because of the worker shortage. There was a huge problem. So all this created a lot of problem, and actually the buyers, to avoid the delays, ordered quite a bit more because they should have the goods on the shelf. So this is what happened before the COVID, I would say phase 2, basically. After the phase 2, what has happened is that now the government, because of the inflation, has now started to increase the interest rates worldwide, and bring down the stimulations, or bring out the stimulations completely. Now, what is happening is naturally this, and the same time we are having to face one of the largest, the largest hike in the petroleum and gas. So what is happening today? The household income all over the world is now going more towards the petroleum and gas, and also people are paying a higher interest rates because of the interest rate hikes everywhere, including India. And this is and the inflation is taking toll. So with all this, and even still the logistic problem is a problem, it is not completely solved. And even though the container availability has now eased up a bit, and the freight rates have dropped a bit, but not to the level pre-COVID times. So I think all this will take a bit more time. And we are seeing that the textile industry, because of that reason, the pent-up demand going away, the normal demand, the stock, the goods which are there in the US and other countries, there are a lot of stock which is lying unsold. And because of that, the textile industry is now facing a bit of a challenge in the new orders, or the new orders coming in from the buyers. So I think it will be another 3-4 months when all this gets readjusted. And I think again we'll come back to a normal demand position in the next 3-4 months. But it will take time because too many things have happened in the last few months after the COVID. So all this is multiplying into the effect. So I think in another 3-4 months, we will see everything coming back to normalcy. And this increase of the interest rates is also taking a toll on the commodity prices. So the commodity prices are also world over coming down, including raw cotton has come down world over. That same way, I think it will also come down. So I think everything will, a little bit of normalcy will come in, and that will again bring back the demand.
That's really an interesting thought.
I think we've lost Mr. Pradhan, if I'm not mistaken. So Deepak, would you like to take over? We have lost Mr. Pradhan.
Yeah, I think he just was there and then disappeared, maybe just disconnected. Okay, we'll just wait for 30 seconds. Otherwise, we'll just. I think Dr. Abhay Sinha can also, add on to the similar question on that, post-COVID, how, on services side it's being seen and what was the impact and how it's recovering. So, Dr. Sinha, if you can give us some feedback.
Yes, Deepak, thank you so much. In fact, you see, going by whatever data available, like 74% decline was observed in tourism and education sector. We are having more people, students going outside. Hardly 50,000 comes to India. So that too was a setback during this COVID time. The travel and tourism sector is definitely going in an upward swing now, and we believe that it will not only recover but definitely will gain more than previous years in terms of the inbound tourists, the numbers. The challenge what we are facing is the kind of which will give more value. So far, the inbound tourists coming to India are not, like from the developed world. the numbers are quite dismal. And so we require high net worth people traveling to India so that they can spend money and, not to be backpackers only. And, the related sectors also gains out of it. In MVT space, definitely like a lot of surgeries or, the treatment which were on hold are now back. So most of our hospitals are now gearing up to accommodate those patients. So looks quite good in these pairs. Accounting services have been there, so there's not much of change we can expect. And that's what the limited point I am having on this. But the services sector impacted quite during a huge dent during the COVID time, and sector to fend for itself because even SEIS was not given during those times. So a lot of business continuity challenges came up, and that is what we need to address, and we are trying to address that. Thank you.
That's great. Thanks, Dr. Abhay. I mean, that was really a nice thought. Now, this was really a good session. Unfortunately, we are running out of the time. I have already exceeded by additional 10. So I take this opportunity to thank you, FICCI, for arranging this kind of a session. And I'm sure for the next 1 week, people, it will be of great benefit to all the participants and all the people listening to this kind of a session. So I take this also opportunity to thank all the panelists for this session. So thank you very much. Over to you, Deepak ji.
Thank you, Mr. Kishore, for doing this, very eloquently, doing the moderation of this, session. And I think there's a great thought left behind with us for analyzing by all three great, leaders out here from the export side. And also, thank you very much for Mr. Mahalingam for giving us perspective from the ECGC side also. Anyone, anyone has any question, they can either send it to us right now, or they can also email us so that we can get some, feedback on their queries. Before I close this session, I would like to request our co-chair, Ms. Ujjwala Singhania ji, for officially proposing a vote of thanks.
Thank you, Deepak. Good afternoon. It is indeed my pleasure and privilege to propose a vote of thanks to the esteemed panel as well as to the audience of today's virtual session. First, I would like to thank the state government representative for sharing invaluable insight on how state government is supporting MSMEs in Maharashtra. FICCI would be happy to collaborate with the state government on some of the initiatives. I would also like to thank Mr. R. Narayan, President FICCI CMSME and founder and CEO of Power to SME for sharing initiative taken under FICCI CMSME to support micro and small organizations across India. As MSME Week is focusing on discussing the theme of enhancing participation of MSMEs in global value chain, we are deeply thankful to Mr. Manoj Patwadia, Chairman, TextBrosil, Mr. K.L. Dhingra, Western Region Chair, Engineering Export Promotion Council, and Mr. Abhay Sinha, Director General Service Export Promotion Council, and Mr. R. Mahalingam, Deputy General Manager, ECGC, for sparing their valuable time today and providing their inputs. I would also like to acknowledge support of our sponsors, ECGC and Tata Tele, for the MSME Week and thanking them for collaborating with us. Last but not the least, a big thank you to all our audience for participating in today's session. Tomorrow's session will focus on digitization, and Mr. K. Kos, CEO ONDC, will be the keynote speaker. We will also hold a session on government e-marketplace. I again thank each one of you and all the participants for their time and wish you a very happy International MSME Day. Thank you.
Thank you.
Thank you. Thank you very much.
Thank you. Thank you very much. Thank you, everyone. We'll meet again at 2:30 for the audience, benefit on the session on digitalization. Thank you very much.
Thank you. Thank you.